Welcome back to Startup Talk. I am the startup coach, founder of TorontoStarts, one of the largest startup communities in Canada. And with me today are the co-founders of Equivesto, Ryan and Alex. Welcome.
Hey, Craig. Thanks for having us.
Thanks for having us, Craig.
It's great to have you. You've been working in our community for a long time. I've known you, but a lot of people don't know what Equivesto does. So why don't we start with what does Equivesto do?
Certainly. I think we've known you for well before we even started this business. Equivesto is a licensed exempt market dealer and equity crowdfunding portal that enables everyday Canadians to invest in vetted startups, small businesses, real estate opportunities starting at only $100. Through our service, businesses can raise up to 1.5 million from their customers, fans, followers, and extended community members. So it creates a larger pool of potential angel investors companies can source investment from, and provides private investment access for more Canadians.
Now, I know you both had full-time jobs working with large corporations before this, and it's a big jump to leave a lucrative job and build a startup, and even more of a challenge to meet all of the regulations that Equivesto had to do to go where you are. So the question is, why did you do it?
I wouldn't say that my past job was lucrative, but certainly more predictable career path. But I think what scared me more than failing at building a startup was the sort of regrets I would have in the future if I didn't follow what I was passionate about. Our entrepreneurship for Alex and I is in our blood, and the problem we wanted to solve was early stage funding. Alex and I go way back, going to the same business school. We eventually, best friends. And we always said we would start a business together after uni. And Alex went into his finance career. I went into a tech career. So it was sort of fitting that we started a fintech. We saw that the number one reason, startups failed was due to undercapitalization, with underrepresented groups such as BIPOC and women-led businesses having a significant disadvantage. So at the time when we were looking into how to solve this problem, the concept of equity crowdfunding, like a democratized version of angel investing that allows the general public to invest, alongside angels and VCs, was blossoming in the US and UK. And we knew that this was something that we needed to bring in, sort of mainstream into Canada. And like all financial products, Canada is really, really slow to adopt. It took us 3.5 years to get, sort of everything together and get registered. But, if I look back at our original deck, it's really nice to see that, our central goals haven't changed at all. Creating a better way for founders to raise capital and bringing, private investment access to all Canadians. So it was just simply something we knew we had to solve.
How big is this problem of on the inability of raising equity for startups?
Well, it is a quite sizable challenge, Craig. And I think part of what makes it more complicated is a lot of the information and content being created for the startup community is often created by one of the largest startup communities in the United States, in Silicon Valley. And so a lot of the content there is really focused around, doing large raises from American venture capitalists with big valuations. And, if you're on things like Crunchbase or PitchBook, you're seeing stuff like this happening and you feel like everybody's out there doing this, closing these big rounds. The reality is, especially in Canada, there's only a limited number of angel investors and a limited number of venture capital firms. And so from the perspective of a company going out to look to raise capital and actually get access to funding, traditionally, with being able to get capital only from VCs, angels, groups like that, there wasn't always a massive sort of unlimited pool of funds available. It could become very competitive, and it was really just trying to get money from these limited individuals. And with equity crowdfunding, it's really changing the number of people who can actually participate and become investors in these companies. It takes it from, okay, you need to go and sort of seek approval and validation from the small group of more powerful individuals to now everyone is able to participate, everybody is able to invest. And the amount of capital in Canada that is being, controlled by self-directed individual investors who are looking to invest in higher risk opportunities, whether in the public markets or the private markets, we estimate to be over 300 billion Canadian. And that's far more than's been deployed into startup funding, so far. That's in the public markets. And now with equity crowdfunding, companies are able to allow their communities to take some of the funds they might have been putting towards public markets or other activities and put them towards startups. And that really kind of changes the game for Canadian companies and their ability to actually raise capital. And from the perspective of a company going out to raise capital, people are often focused on, okay, I need to get money from VCs. I need to do a VC raise. And they forget maybe sometimes that VC funds are actually created to invest in certain types of companies, and they have their own investors, which have demands, which have requests. And so VC funds might be looking for a very specific niche of tech company that's looking to scale within a certain time frame. And if your business doesn't happen to meet that, then that VC fund is not going to be interested in funding you. And so not only are you limited by the quantity of VC funds, but also making sure that your business happens to align with, what VC funds are currently interested in and the timeline they want to meet. So it does end up being rather limiting for companies looking to raise capital.
For example, like if a VC is looking for a 20 times return on investment, and you're only potentially going to yield at 10 times, they wouldn't be interested, but thousands of other people potentially would be.
Right. It's a fantastic point. Like the VCs are targeting a very specific type of investment opportunity for their own investors. They want kind of moonshot kind of businesses where, okay, more than half of them are going to fail, but the ones that succeed are going to become so successful and so wealthy that they'll cover the losses of all of the rest, as opposed to businesses that might be able to generate far better returns than you might get from just investing in companies in the stock market, because they're smaller and they're going to grow to that larger size business and you can kind of get in on the ground floor, but they're not at that same scale of what a VC is looking for.
Yeah, I agree. I think if your business is $100 million potential, which is a great business, most VCs aren't interested, but other people are, and that's a great potential business.
Right. There's so many businesses, it's either you're a small business and then VC wants nothing to do with you and you have to go to a bank, or you're like a tech startup that's looking to rapidly scale and go global and your market is like $1 trillion. And the companies anywhere in the middle, and including the small businesses, haven't really had access to equity funding at scale before. And it's really been just limited to kind of being lucky enough to have wealthy friends and family. And so with equity crowdfunding, it's just allowing that whole community to come in and invest and support the business. If your business is growing and becoming more successful because you have a strong customer base who love your product and care about it, and they want to help support your business grow, equity crowdfunding gives you another way to actually make them shareholders, co-owners in the business as well, so they can benefit from your growth and success as well.
So how hard is it to get access to capital for, those businesses that are looking for a 5x or 6x return? And why is it so hard?
Well, I think it really does speak to some of the legal challenges of actually getting capital to a private business that doesn't, just in general, a private business, right? If you think about the traditional space, if a company's going out to get external capital, it's limited to finding high net worth investors who are allowed to invest in private businesses, or to go out and get a loan, which is usually has to be backed by personal guarantees and assets of the company, and all these kind of things from a traditional bank. People always want to find investors, and they're hoping that they're finding an investor that's kind of got this big bag of money, and they're just looking for places to put it. Nobody is sitting around with money doing nothing. Certainly larger, more experienced investors. Those investors will have the funds deployed elsewhere, and they might move the funds to something new if that appears to be a better fit from them. But in terms of actually being able to go out and get access to capital and raise capital from individuals or find capital, there's not really there's not really a ton of options. There's grants from the government, and I know there's, partners of ours and yours that really focus on that. But it's not like every single potential way that a business could potentially raise capital is very easy to access, and it's outlined, it's kind of placed simply in front of a company. It's hard work raising capital from VCs in the first place. It can take months and months of pitching and going and speaking to people before you eventually get a yes. And even in a traditional sense, it's a lot of work. Not that equity crowdfunding is easy and you just kind of show up on the platform and people throw money at you, because it's not. But it's certainly, it just is providing more opportunities for companies to raise capital.
You mentioned early on, or Ryan did, about women-led women founders and BIPOC founders. And I was talking to one of the founders of SheEO a couple of years ago, and she said that women-led companies only get 7% of the VC funding. I don't know if that's still the problem. Can you tell me a little bit about the gaps here, and if there is an explanation for them?
Yeah, certainly, Craig. It's a very, very big problem. I missed the last section of that question. What did you say?
So can you tell me about, where are the biggest gaps and potentially why they are there?
Yeah, I think it stems centrally from, investor representation. If you look at the demographics, the representations of sort of angels, and there's some stats on our website about it. If you look at the demographics of how that spread is made up, the actual companies that get invested in are almost identical. So 1%, Black investors equal 1% Black founded VC-backed companies. So there's a very clear indication here that, subconscious, unconscious biases are playing a pretty big role in terms of how companies are getting funded. So that's one of the areas that's amazing about, equity crowdfunding, as we refer to as democratized investing, is it's providing access to investment to a very wide net of people who generally come from these companies' communities, who understand them better and thus can trust them enough to invest. And that's really what we're all about, is providing that sort of level playing field where at least you have a fair shot at accessing that same capital.
Well, and to build on what you're saying there, Ryan, when we think about, how a lot of individuals generate sizable wealth and transition and have transitioned from kind of a regular person to a very wealthy individual, a lot of individuals have created their massive amounts of wealth through investing in private companies and in the private markets. They get into companies early, the companies end up being successful, and then that's really kind of where they're able to make their fortune. They invest in a wide range. Some of the companies don't succeed, but some do, and then that helps generate that wealth. And so equity crowdfunding actually solves kind of both pieces, where not only are we helping founders raise capital from their extended communities and get access to capital from a variety of sources, and so more diverse founders can also get funding, but at the same time, we're allowing more diverse communities to participate into this traditionally closed off private investing process, and hopefully helping to distribute the wealth even further. If you think about the statistics that Ryan mentioned, where, I think it's like over 70% of investors happen to be white males, those are the individuals investing their money in the startups. And when the startups do well, those are the individuals financially benefit. And so we have a situation where, there's not a lot of opportunity for that wealth to be shared and also have returns being given to other communities, because they don't really have a chance to participate. And so this is creating access on both sides.
Well, how does it all work? I'm not going to go and ask from a random person on the street, will you give me $50,000? So how does equity crowdfunding work? Yeah,
well, and starting with your example, actually, as a private company, going to a random person on the street and asking for $50,000 is actually illegal. And so there's actually quite specific rules that the Canadian government and securities regulators have set out around who can raise money from who and how you can ask and all that sort of stuff. But essentially, equity crowdfunding is a company going and working with a licensed platform like Equivesto to be able to make their investment opportunity open to the public, to high net worth investors, but also to everyone in the community. And so a company would go work with a platform, go through our full due diligence process, get verified and get ready for a campaign. During that process, they would also be reaching out and gathering their community, getting people excited, letting them know about what's coming. Once the company is all ready and the campaign is launched, then they can invite in their community and the general public to invest in the business and raise capital that way. Individuals literally sign up as an investor on Equivesto. We run our sort of background checks on the individual investors. We are actually licensed to review each investor and help make sure that they understand the risks and the challenges of investing in a private company, and they're fully aware of what they're participating in. We're actually also able to provide investment advice if they so desire about their suitability to different investments on the platform. But that all is done quite easily and quickly. So the individual signs up as an investor. They're able to see the offering and invest, sign digitally, provide the funds all in real time. And then the funds are gathered in a segregated account during the campaign. The campaign runs for up to 90 days, and then it closes. If the company was successful and raised their goal of the funds, then congratulations. The funds are released to them. The filing is made with the regulators, and now all of these individuals are investors in the business.
Can you give us some examples of equity crowdfunding working?
Yeah, absolutely. Before we would use examples of other companies, but now that we've been operating for some time, I'm actually going to use some of our own. To date, we've had over 20 companies launch something with us, and some of the more notable success stories include one good example would be like Hutzy Financial. They're a neobank that that plans to help people spend, save, build credit, track their finances. And they're really focused on, financial wellness for people, regardless of their background or situation. So this was a message that really, really resonated with, what equity crowdfunding is all about. So they were able to raise over 300% of their goal and their target on Equivesto. So one of the highest, in terms of percentage over their goal that we've had in our history. And then they later on went to raise an additional $500,000 on Dragon's Den, which was amazing from Investing Titan West Hall. So, they're on a really good trajectory. I think, we played a small role in their story, but Tafari and the team have done an excellent job, taking their business to the next level. And it was a clear example of showing how, a community round, an equity crowdfunding round can play a good position, and how future angels, future VCs are not afraid to participate after or alongside community rounds. Another example I would probably bring up would be Element 79 Gold. They were actually our first clients, and as the name suggests, they're a sort of Canadian-based gold exploration company. And after their crowdfunding raise, they went IPO and listed on the CSE. And what's amazing is they actually hit a 52-week high of $1.65, which was a 16.5 times growth from the 10 cents warrants that were sold on Equivesto. So just to be clear, if you invested $100, and sold at that time, your investment would have grown to about $1,650 in less than a year, which is an amazing return. I'm not saying that that's going to happen with every company, but this was a really good example because many pre-IPO companies like to utilize a mechanism like equity crowdfunding to help meet that they have a minimum requirement of number of shareholders that they need in order to list on an exchange. So it's a mechanism that they use to get that base, and it's also, in a way, it provides them that sort of marketing reach that they could reach new audiences to get that base. So that's a really shining example of a pretty traditional space utilizing equity crowdfunding as well. Then another one, and a final example I would bring up would be Award Pool. It's kind of funny, they've come full circle. They were a client of ours, and now we're actually a client of theirs, and they're doing some really, really interesting stuff in the sort of NFT space, helping businesses better engage their users. We in fact set up our own rewards app utilizing their technology, and And it's really designed to essentially reward our most loyal users for learning about Equivesto, sharing our content and learning about the private investment space. So really the idea of why we partnered with them was to help spread financial literacy through gamification. So we wanted to make it more fun. The private space can be boring at times, and there's lots of information and misinformation out there. We've spent time creating this big base of information on our website through our learning center and through our community page. And we wanted to make sure more people saw it. Was through something amazing like what Award Pool's building. But anyways, back to their success, after their ECF round, Award Pool was able to close an additional $2.8 million from private investors, which really showed not only their acumen as a business, but also, the interest in their space and the cool things that they were doing to solve what they're solving in terms of engagement and rewards.
Well, it wasn't just even private investors. It was also some VC funds as well. And so it helps to support that, it's not like, oh, I do an equity crowdfunding round and then no VCs will want to participate or anything like that. It shows, even a few years ago when we were just getting started, there was still, it was clearly understood from VCs that they would be happy to participate even after an equity crowdfunding round.
Yeah. If I understand, go ahead, Brian. Sorry.
No, I'm good.
Those sound like great companies, but just to hit on a note saying not just startups, I understood that a cafe in BC raised on your platform.
Yeah, that was also a great example. It was a women-led business out in Squamish, BC. So they were a restaurant. They launched during the pandemic, which was amazing to see them, and they have hit market, which was great. Restaurants were in question for sure at the time, but they used a really interesting concept where that their backers are going to be people who are in their community, so people who are around, who go to their restaurant, who trust them, who know them, who enjoy their product, their service. Those are the people that they were focused on bringing in as investors. And it's amazing because when you build and put up a restaurant in a community, your community sort of comes together. And, instead of being something like donation-based crowdfunding or sort of rewards-based crowdfunding, where you're sort of either getting a product or just simply donating, these people are getting ownership stake into the business. So they are forever advocates for your business. They are co-owners, and thus they will essentially push your message, advocate for your business into the future. So that's a very good example of thanks for bringing that up, Craig. And we also had something similar in Alberta, a company called Alberta BioBoard, who was essentially a factory that was looking to in a small county called Stettler County. They were setting up, and they ran an equity crowdfunding raise, not necessarily because they needed the capital, but because they wanted to offer an opportunity to their local community, a place where there isn't that many of these types of large firms around, to invest and participate in the growth of their business. So that was another example of how a community could come together and support a business, opposed to just traditional private investors sort of reaping the rewards.
What is Equivesto's business model? How do you make money?
Yeah, we have two main products: equity crowdfunding, as we've mentioned before, where companies can raise up to 1.5 million from their community of fans, followers, and extended network. For that, we charge a sort of $2,500 application fee, which helps cover some of the due diligence costs. But for us, it doesn't nearly cover enough. It's mostly about asking the question to a business: are you serious? Are you ready to do this thing with us together? Because it is a big investment in terms of time and energy. So that's the reason we charge that up front. And then where we make most of our money is on the success fee. We take a 7% success fee from successful raises. One of the requirements of equity crowdfunding is to set a minimum target. So, if investors, or if a company is unable to reach that minimum target, all investors get refunded. And so we are closely aligned to the success of companies. Like our success is closely aligned to the success of our clients. So that's our main product. And then we have a secondary product, which is, accredited investor only campaign. So a much more traditional mechanism for raising capital. We're a technology-based company. And so most people in the exempt market dealer space, they are still a little bit old school. And thanks to our fully digital online process, traditionals like accredited investor only campaigns are very useful to funds and traditional real estate and other areas that are looking to process their investors through a service like ours. So, we help them with their document signing, we help them with the actual transaction of the product. And of course, we do the upfront due diligence and investor accredited investor status vetting, which is also important. I think that's a big part, and Alex could talk about this more, is in the space, many people don't actually ask the question to their investors, are they truly accredited? And that is dangerous. That is dangerous to the company, because, if things don't go well for your business, and the fact that you didn't actually take that information and confirm it, they could essentially sue you. Yeah,
I understand. Go ahead. I understand that you're using your own platform to raise a capital for Equivesto. What should people know about this investment opportunity?
Yeah, so we're actually very excited to be able to do that. We got our license and launched in 2020. And as Ryan mentioned, we've done well over 20 campaigns so far. I think it's almost at 30 at this point. We launched 7 new campaigns on Sunday this week. So we're continuing to grow quite rapidly. For us, we have received so many requests from members of our community to be able to invest in our business as well. We're out here facilitating community rounds, allowing community to participate. We're talking, to you and to other members about the benefit of allowing the community to invest. And we hadn't had that opportunity to do it for ourselves yet. And there was a really strong demand from the community to make that possible. And so we really were excited to be able to once we had really established ourselves and got operational and had run a fair number of campaigns, we wanted to open ourselves up to our own community and essentially allow them to invest in us and share in our upcoming growth and continued success, and really be able to reward them for the trust they placed in us and the support that they've given us since we launched the business. That's really the main focus. One thing that I would also note, as we mentioned, there's some specific rules around equity crowdfunding and sort of how it works in the Canadian space. And we are happy to be able to actually participate and provide feedback to the regulators around the crafting of those rules just last year. But in these equity crowdfunding rules, they actually prohibit platforms for putting themselves on the platform using this set of equity crowdfunding rules. And so even though our campaign is open to the public, the way we have structured our campaign is actually using a different set of rules called the offering memorandum set. And it's not necessarily super relevant to everyone, but the main point that I mentioned is running an offering memorandum round requires considerably more due diligence review, legal preparation. It requires audited financial statements and so many additional pieces. And so we have done all of these things as well to be able to allow our community to invest in us. And that provides even more security and protection for investors from the general public. It's something that is generally prohibitive to a startup to complete because it can cost between $50,000 and $100,000 to do everything necessary to prepare an offering memorandum round. So most startups are not going to spend $100,000 before they can even take $1 of investment. But for us, it was really important to be able to allow the community to participate. And because we're already regulated and we're already preparing audited financial statements, we already have a lot of these kind of security and protection requirements in place anyways as a licensed platform. It was much easier for us to prepare that in addition to facilitate investment in this way.
So who can get involved? Who can
Who can actually participate? Right. I'm
Yes.
so busy talking about the legal stuff, I forget the reason why people actually want to hear the answer. So we are currently licensed in 4 provinces, so we can take investors in our own campaign from Ontario, Alberta, Nova Scotia, and British Columbia. The minimum investment in the campaign is $500. And basically that's all the requirements. You need to sign up and create an account on Equivesto, of course. And we're going to ask some personal questions, as we're required to do by the government, in order to verify your information and confirm that you're suitable. But the sign up forms should take, we always say 5 minutes, but it's really more like 1. And then you can actually make the investment entirely online, sign the documents, move the funds and everything, all digitally.
What are your growth plans at Equivesto?
Awesome. Yeah, some of our main goals post raise include obviously broadening our investor base. We want to go Canada wide. As Alex mentioned, we're in 4 provinces, and thanks to the new rules that just came out in September of last year, it's now across Canada. So it's a simple process of essentially picking up all the other provinces and making it available. We also want to market to them. We have our feet in the ground here for sure in Ontario, but we definitely want to go out there and build a presence in these other provinces. So marketing to them is very important. We want to improve our user experience by implementing smarter technology. As Alex mentioned, our onboarding forms can take up to 5 minutes. We want to make that quicker, more efficient, but also keeping it safe and secure is our main priority, and keeping it, of course, compliant. Expanding our team. We're a very lean team as of now. Alex and I wear many hats, but to keep our sort of quality of service to this growing base, this accelerating base, we definitely need to bring in more people. So that's another main priority of ours. List even more companies on our platform, so investors can have a wider variety to choose from. I think we've already represented that by launching, an additional 7 companies on Sunday. So we have the most companies we've ever had listed on our platform right now on there. So you go peruse, you could find anything you could possibly think of. I think is a pretty wide variety to choose from. So I think that's also important from a diversification point of view. Investors need options. So that's what we're really going to try to do is to bring on more and more businesses. Develop more free education for investors and companies, as the private market knowledge is pretty limited in terms of, especially Canadian private market knowledge is pretty limited. So we want to make that publicly available. So, as I mentioned before, financial literacy is a very big task we're undertaking in terms of providing, very clear and very easily digestible information. We've created a community page over the last, I think 3 months ago, we launched it. And the idea is to bring people in so that it's more interactive. People can respond, engage with our content, and provide a safe and a location where people can ask questions. That's really what our community page is about. What else? Grow our partner network. I think, in order, we can't build this in silo. I think, we have to create a more cohesive startup and small business ecosystem. A lot of people are solving different problems, and we're not trying to solve them all. So, growing our partner network, not just in Ontario, but across Canada, is important to us. So we've already developed some amazing partnerships. We just want to build on that. And then finally, building more products. I think, financial products are difficult to bring out. It took us so long to develop and bring out, our initial product, but that's another area. And we're going to, get feedback from our users on what will best benefit them, not simply what, Alex and I think the space is going, but, utilizing this amazing new base that we just got, all these equity crowdfunding investors. They are probably our most loyal users of our software. And so asking them, what they think, what would be the best products that they would like to see, that's another area that we'll be focusing on.
Can you tell me about some of the team you have backing you, advisors, mentors, investors?
Yeah, absolutely. I mean, obviously at the helm is Alex and myself, Alex the Fin, me the tech, but our third and sort of final board member is Cameron Anderson, who really keeps us in check. I think Alex. He's also our lead investor, and he has an amazing track record of angel investment and entrepreneurial experience. He's done this for a very long time, and there's not that many businesses he really takes a board role in, but he chose us for a reason, because he believes in us, and we're very thankful for having him. He's definitely helped guide us through the last few years, and yeah, we're extremely happy to have him on board. Another key member would be our chief compliance officer, Lawrence Boyce. Yeah, or Larry, as we call him. He brings a lifetime of experience in Canadian compliance and regulatory space. I think over 40 years. Like a funny point is, in fact, he actually helped write the chief compliance officer qualifying exam. So it goes to show how much he knows about the space. He was, I think, for many years at the Toronto Stock Exchange, and a few other places, a very reputable note. So, in development of our policies and procedures and just overall guidance with our entire compliance structure, he's extremely valuable to our team. Then we have a really extremely robust advisory team with, I think, a collective over 200 years of collective experience, in all sorts of areas like finance, technology, venture capital, angel investments, investment bankers, private equity. They have really brought, I guess, a guiding light to when Alex and I, have questions or need some advice. And what's amazing to see is many of them, I think, majority of them are also backers of our business. So they not only saw potential at the beginning, but also it futurely led to them essentially putting their money where their mouth is and supporting us. So which is amazing to see. And they helped us guide us through that complicated registration process and reach our, I would say, current point of success. So we're thankful for having all of them on board.
Do you have any tips for those thinking about raising capital for their startup?
Yeah, I think raising capital is definitely something that takes a lot of focus and time and dedication. It's not often as easy as everyone would like it to be. I think I'll share sort of two main tips. The first one being, investors are people too, and so take time to think about who the investor is that you're approaching, why they're investing, if they have an investment thesis, whether that's a venture capital fund, an angel investor, or anything like that, a family office. Think about and take the time to research what kind of investments they like and what they look for and what their approach is, because that'll help you actually determine, which people you should be reaching out to for you. But in terms of advice that can really help you have a successful round, whether it's with angel investors or equity crowdfunding, is really about understanding the value of building community in your business. Equity crowdfunding is an opportunity to allow your community to invest, but those same community members will be your product testers, your first customers, maybe even your suppliers, or they can become almost like a guerrilla marketing team. And so taking the time to be open with people about what you're building and building a sort of mini fan base almost as you're growing your business is really important and can pay huge dividends down the road for your business. So don't necessarily be purely in sort of undercover stealth mode for your whole business. You want to be maybe a little bit stealth mode around maybe your technology or your sort of secret sauce or something like that. But you certainly want to have an opportunity and focus on gathering people in a wait list or a newsletter where you can build some community around your business. You can do this for free. If you're in stealth mode for 2 years, you can tell people, I'm building something cool, join my wait list for 2 years. And then when it comes time to, pull off the cover and really reveal your shiny business, you've also got maybe 1,000, 5,000 people who are all kind of waiting and excited to see how they can support you. And, we always talk about, takes a village to raise a child kind of a thing, and it certainly can take a village to help grow a successful business. So don't miss out on the opportunity to build your community for free over time.
That's a great advice, and something I often tell people. Stealth startups, I don't want to tell anybody, you can start a community in the area that you're starting your business. Like, keep in mind, if you're an energy startup, then you talk about problems with energy and get a community around that or whatever. And then you reveal whatever your company is when you're ready to a community of interested people.
Right.
Like, so there's easy ways to talk about those things without actually revealing anything about what you're doing. So great advice. I know you've both seen pitches, and you both know investments on both sides of it. So any advice on pitching to investors, what to do, or maybe more importantly, what not to do?
Yeah, I think, the biggest thing that when pitching to an investor is really being concise and clear and direct in your message, but also being able to demonstrate your passion for your business. So making sure you have prepared adequately. And so, look at some templates that either we have. I know, Craig, you have a bunch of different pitch deck templates, but use a template to kind of build your story and your message. Think it through. You've been working on your business for months or years, and you're sort of immersed in this whole idea and this story. These other people are not. So you want to make sure you can clearly outline in a sort of storytelling flow almost of, okay, what is the problem your business is solving? How are you solving it? What is the market that you're addressing? And how is there potential profitability for your business? How is your company actually going to make money? You want to work through a clear story, almost like building a little house, letting the investor know the details in a concise way of how this is going to work. And make sure that you can bring that passion across as well. When you're pitching an investor, they are looking and potentially considering investing in your business, but you're the one who is running it. So you need to make sure that they can understand and get a feeling from the pitch that, okay, you're clearly an intelligent person who's gone forward and created this business, but you're going to think through the problems and you're going to address them in a level-headed way. You're excited and driven to actually go and solve this problem. So when things get tough, instead of quitting, you're going to somehow find a way to get through it and achieve those results. So having that passion combined with that sort of calm, clear-headed, and detailed understanding of the business itself fit to a very direct and straightforward story will really help clarify your entire message to investors. And then if you combine that with the advice before about how to prepare your business in terms of making sure you understand who you're pitching to and what their interests are, that'll set you up for great success. And don't be discouraged. There might be 99 or 999 no's before you get to the yes, but your desire and willingness to keep going is really what's going to make that difference. And the most important advice of all is know which advice is good advice and which advice is bad advice. Because, as much as I love our startup community, there's lots of people offering advice all the time, including me. So make sure to think about whether my advice is actually useful to you or whether, it's maybe not the right fit.
Yeah, great points. Just because we think it's good advice, it might not be the right advice for the founder. And that applies to any investor and any mentor. That you got to keep in mind, your startup more than anyone else does. So you have to be that decision maker. Being involved heavily in the community for the last 3 years or so, or 5 years or so, what communities and resources would you recommend in the startup community?
Yeah, absolutely. Well, we obviously have our community page and that learning center I mentioned before. So definitely check that out if you haven't already. Lots of free resources on there. About private company investments, private capital raising. So whether you're a founder or investor, check it out. We always recommend, if you're a really early stage business, you should consider working through a structured accelerator. I think some of our partners that we've done sort of educational workshops with include, the DMZ, the Forge at McMaster, DDQIC at Queen's University, where Alex and I are from. Haltech, and the Innovation Factory are other partners of ours. There are also many other accelerators out there. University-based ones definitely are an excellent place to go. But yes, a good resource for at least building the basics around your business and making sure that you're getting, like I said before, the right, or like you mentioned before, the right information. If you're looking for a startup lawyer, we've also done some great work with, and Craig, you have too, with Insight Legal. There aren't that many firms out there that truly understand equity crowdfunding, and I think we've sent a lot of clients to them, and they're Toronto based, and they definitely know what they're doing and are able to help us out with our clients. So I recommend them. Some other great communities of sort of in founders and investors, Startup Fuel, that's another partner of ours, Founders Beta, another partner, and as well as Equo. So all excellent locations where you could set up a profile and get to know other founders and investors. So and excellent places. Co-working space. We in Toronto, we actually work out of a company called Workhouse, which is a Canadian owned and operated co-working space. So we recommend them. Definitely love supporting Canadians. So that, yeah. And another one would be for pitch training. Craig, of course, Will from Out Loud Speaker School. He's world class and has done some amazing things with Techstars and some other very reputable accelerators. So I would recommend him if you're looking to enhance your pitches. And then of course, TorontoStarts, amazing resource. Everything startup. Your events are amazing. So we'll be at your event tomorrow. So we're very excited for that. You've been a great partner for us.
You've had a number of companies raise capital on your platform, and you've talked about a bunch of them already. What are they saying about equity crowdfunding versus traditional capital raises, and where does it fit in the whole cycle? I think people are confused about that.
Yeah, I think a common sort of theme most of our past and current clients say about us is our sort of quality of service. I think we're willing to go the extra mile to ensure that companies are in the best position to succeed before they launch their funding campaign. So we really sit with them over months to prepare them for an equity crowdfunding round. An odd stat that we always bring up is we have delayed every company, or on average, we have delayed every company by about a month before they've launched. And I know that's an odd thing to bring up and be proud of, but, and foregoing revenue and increasing our costs, but it's really to make sure that the companies are fully prepared before they launch and ensuring their success as best we can. And so we really are focused and aligned with founder success by putting the time and putting the effort in to make sure they understand what they're getting themselves into. And what makes us different than, between us and sort of traditional raises is obviously the access. You're able to access people you would normally not consider investors when you're seeking capital, your extended community. So with the right approach, you're able to actually convert, as Alex was talking about before, your social capital that you've built over time, that wait list of people, and eventually into investment capital with the right approach, and if everything goes well. So I think that's really the biggest difference between traditional and equity crowdfunding.
Building on your comments there, Ryan, another difference that some people might not realize between a traditional raise and equity crowdfunding would be the role that we play as the platform. So with traditional capital raising, let's say an angel investor group or something like that, you pitch the angel investor group, and then the angel investor group has to basically assign someone to go and do months of due diligence on you, basically whoever puts their hand up first from the angel group, essentially. And then also you will then negotiate directly with those investors around the amount of the investment, but also the valuation of your business and all these other pieces. And sometimes it can feel a little bit like a zero-sum game where the lower the valuation is, the more control they get for the money and everything like that. So it can go a little bit back and forth. When raising through an equity crowdfunding platform, we are that friendly intermediary. So we are doing the due diligence for all the investors in advance. So the investors can show up and know that, okay, all these things have been checked. It's all safe for me to make an investment. But also at the same time, the founder is able to provide us information for us to verify that doesn't then have to be made public as part of a campaign. So if you have a bunch of patents and you want to talk about them because they really helps strengthen your business, but you don't also want to display the patents for everyone to read, by providing them to us, we can verify that they exist and everything and allow you to talk about it without then having to make it public. I would also say on the sort of valuation discussion, we as the platform will help companies go through, plan and understand their valuation, find ways to strengthen it if they're looking to sort of really support a certain valuation, and then also structure the deal for them so that when it is placed in front of investors, they have a fair understanding of what they think that they're worth, but it's also positioned so investors feel like they're getting a good deal and they're excited to participate. So it changes it a little bit from I'm going to sort of deal directly with this investor who has, it can feel like sometimes all the power, to I'm approaching the situation with help, with experienced assistance so that I can be open to investment and it feels safe for investors to participate, but also I don't feel like I'm not in a control position.
I really like in all of that, you slow people down, you take the time, you make sure they have the plan. And, I know that Ryan said it's funny, but to me, it's not funny because you're putting your money where your mouth is. You generally lose money if they're not successful. So you're only successful if your customers are successful, and therefore you care more. It
Right.
just happens. Yeah, that's amazing.
Yeah, well, and we'll sometimes have companies that work with us come back and say it's like, it's almost like they went through a mini accelerator working with us because, you come with your pitch deck, you come with your financial projections. We're not just sort of going to take that and attach it to a campaign page and sort of pat you on the back and say, away you go. We're going to go through it in a lot of detail and make sure that it's robust and ready and is prepared to go out and kind of face investors so that when you are in front of the investors that you all are well prepared and everything does make sense and it's been thought through. And so from our perspective, all of that additional effort can take a lot of time, but it's really to benefit the company. And so they benefit from a lot of that without necessarily having to, pay a ton of money up front.
So this sounds awesome. You guys are growing fast. It sounds like a great investment opportunity. If people are interested, can you tell us about the opportunity again and where do they go?
Yep. So we're currently raising capital. Anyone living in Ontario, Alberta, Nova Scotia, and BC can participate. The minimum investment in the company is $500. And you can go to equivesto.com and click view live deals to see all of the deals on the platform, including ours. We'll also post the direct link to the offering. And it's all there on our portal. There's tons of information there. So feel free to go and check that out. And you can reach out to Ryan, myself, or anyone on the Equivesto team if you have questions.
And the links to all those will be in the show notes. But if people would just want to follow you, what platforms should they go to?
We are everywhere. Equivesto is on LinkedIn, Facebook, Twitter, Instagram. Where we've got a YouTube channel with tons of educational videos as well. You can also join our community, which Ryan has mentioned, has a lot of free access to education about investing and getting into the space. And if you just want to say, hey, just send me an email when you've got new deals, I don't really care about the rest, join our newsletter. It comes out every 2 weeks. And all it does is say, here are all the new live deals on Equivesto. It's very simple. So you can join our newsletter on our website as well.
I really appreciate you, both Alex and Ryan, taking the time today to tell us about Equivesto and all the companies who've raised on your platform.
Thanks, Craig. It's been great being here.
Thanks, Ray.
Thank you for being part of Startup Talk. And that's it. Thanks, guys. Do we have anything else outstanding?
No, I think that's it. We'll see you tomorrow.